Hi and welcome to QV8. This is my first video, so I'm keeping it simple. Today I'm introducing the TradingView strategy script I've been developing, built around quant-style logic, mathematical conditions, and volume theory. This is an introduction video, so I'm not going to review the full internal rules today. Instead, I'll show you what it looks like on the chart, what trades it targets, and how am I going to prove that it works with tracking over time. At a high level, this is a rule-based TradingView strategy script. The main idea is simple. Stack multiple confirmations so the script is selective, meaning fewer trades but higher conviction when it acts. The building blocks are quant-style signal stacking, mathematical conditions to filter market structure and regime, and volume theory for confirmation and trap avoidance. On the screen, you're able to see a backtest from TradingView Nasdaq with a period of about 1 year. I would mainly focus on total trades, profitable trades, and profit factor, as I yet have not fully developed the P&L and drawdown calculations properly. However, later in this video, you'll be able to see in real time on TradingView how it works and that it keeps close to zero drawdown. The philosophy is that most signals are noise unless proven otherwise. So the script filters aggressively. Basically, it's trying to avoid chops, traps, and low quality follow through. The target profile is high precision and low drawdown, which is the behavior every prop firm trader looks for, cares about, tries to follow. And just to set the expectation, this is not a high frequency, constant exposure or a hype system. It's just a very selective risk approach system. This is an introduction video, not a full breakdown. I'll show you how it behaves on the chart, what kind of trades it targets, but I'm not going to show you the full internal rules, exact settings, thresholds, or formulas. The goal is to set a stage and then prove performance the right way. Here's how I'm going to prove this properly. I'll run the system under prop firm style constraints. I'll take a funded account in 6% drawdown and recover the losses. Then I'll report the results over time, not one lucky week, but consistent reporting. You'll see entries, outcomes, drawdown, max losing streak, and whether it stays within realistic rule limits. One important point, I'm not going to develop this fully in public. I'll test and improve it in the background like a real product. What you'll get in this channel are the updates like performance, drawdown behavior, and clean summaries of what has changed, without revealing the full internal logic. Now, let's jump into TradingView and see a couple of trades. Now I'm in TradingView and have the strategy open. So let's review the trades one by one. I'm on the 5-minute chart on the Nasdaq. This is our first trade. It's a short. Stop loss on the line. And what's important, the take profit is right after the 5-minute close happens. So 131 R. Let me take a note of that. $131. Here's our second trade. It's long. Take profit at candle close, stop loss at the red line. 0.86. 0.86. All right there. This one is a short, right about here. Stop loss at a line, take profit at the 5-minute close. 0.24. 0.24. Okay, move on. I have 2 trades back to back here. Let's review them. This one is a short. $0.56. So far you can see that the winnings are very consistent. Another short. Right here, 212. However, the trades are not very high frequency. This is something that can easily be seen. I have to scroll back in time quite a lot. This potentially could be our first loss. So our long is here. Stop loss is right there. And then the take profit is right about here. However, I wouldn't consider this trade in profit or break even. I'll consider it a loss, just because a lot of those brokers apply spread and commission. Therefore, I would just count it as a loss of 0.1 R. $4.15 R plus 4.15. And that's still when the history goes. So it's 3 months of backtesting, which resulted in 9.14 R. Considering the fact that this is a pretty low drawdown strategy, we could use risk percentage of 1.5 or even 2 for some traders that have higher risk appetite. Even if I use 1% risk on a 9.14 R, on a 200,000 challenge account, pro firm challenge account, I'm able to pass it in about 3 months time. In terms of funded one, I would be having a quite consistent payout portfolio. Now I think it's a good time to end the video. Please let me know what you think in the comments. If you have some insights, overall your thoughts, and look forward for the next videos.